Here's the problem. When recording videos like this, it sometimes gives off the impression that we've got a crystal ball, that we can see the future, that we know where Bitcoin is headed. But of course, nobody knows where Bitcoin is headed. When we look at those fancy charts, all what we try to do is to figure out what is the expected value of an investment. Is something rather cheap or rather expensive? And even if something is currently expensive, there's still the chance for it to become even more expensive. In the end, it's all about the potential upside versus the potential downside. And there are different models that help us estimate both. And some of those models work better than others. And for example, this very popular model, I believe, is not that great. This is the stock to flow model. So this looks at Bitcoin's long-term price, and it makes the assumption, because Bitcoin becomes more and more rare over time, because the new supply that hits the market gets cut in half every 4 years. Because of that decreased additional flow, the price should go up massively, almost in a step function every 4 years. According to the model, we would be close to 360K by the end of the year. Now, how can we verify the model? First of all, we can have a look at how well did it work in the past, but secondly, also what are the underlying assumptions? Are they true? Regarding the fitting of the model in the past, I'm not that impressed. So we had a model price of $177, while the price of Bitcoin was above $1,000. So that was almost a 10x difference. We then also see how the recent tops tend to be less above the modeled price. So it seems like the overall growth factor is overestimated. We overshot at the beginning, but now we are overshooting less and less to potentially then undershoot. But then on a more fundamental level, this model just looks at the supply. It doesn't look at the demand. And price is determined by demand versus supply. If the halving event of Bitcoin, so the reduced circulating additional supply over time, is the cause for the price to go up, then explain this. Since the merge of Ethereum, the new supply that hit the market was almost zero, while Bitcoin supply continued to happily expand. However, since that merge event, Ethereum underperformed Bitcoin by 77%. So obviously there's more to the equation than just the tokenomics, than just the new supply that hits the market. There are plenty of assets with zero expanding supply. There are many meme coins that have no supply expansion whatsoever, and still they don't outperform Bitcoin over the long term. So using this model for the potential upside is probably not that great. But again, we want to find out what's the potential upside versus the potential downside. Because we work with expected values, we don't exactly know where the price is going. We're just making bets of probabilities. Then how about this model? This is quite popular. It shows Bitcoin with a regression. It's the Bitcoin rainbow chart, and it shows an upside of $800,000 per Bitcoin not so far out in the future. But again, the same problem here appears. In the early days, the price tended to overshoot the model, then it overshot less and less. And so it seems like the slope that this graph is assuming is too high. In other words, it should be much flatter now. This is an overestimation. Then there's another similar kind of chart. This is the Bitcoin power law. Over here, we've got an upper bound of 600K. But again, same thing. We didn't reach the upper bound in April of 2021 when Bitcoin hit 63K. We did not go all the way up to 107, 108K. This is what many people called for at the time. And so that's why it's so important to not think about this in a binary fashion, right? We're just looking at, is something currently rather expensive or rather cheap, and should we rather sell or rather buy? In other words, when the price goes up, it makes sense to take profit along the way. When the price goes down, it makes sense to buy into the asset along the way as well. So we don't try to find the exact bottom. We don't try to find the exact top. We're just adjusting our portfolio weighting. Because in that way, we still make money even if we don't hit the extremes. But then let's say that this is also an overestimation of growth. Why not simply just combine the different tops with a curved line. Why not make that kind of connection? If we do that, then the upside is extremely limited. We might already stop at 111K. Isn't it interesting how the different approaches bring us vastly different upsides? So what can we do then in this situation? I think the best is to look again at the underlying assumptions. So for the stock to flow model, we've already said that it's not just the expanding supply that determines the price, it's also the demand. So you can forget about that model. For the Bitcoin rainbow chart, there's also no fundamental reason to believe in that high of a growth rate for Bitcoin. In the past, it didn't even grow that quickly. The power law is slightly better, but still not ideal. And even this very pessimistic approach doesn't really give any explanation why we should already stop at 111K. It's all just drawing random lines on a chart. Now here's my favorite approach. What I believe is causing at least the short-term ups and downs in the Bitcoin price is swapping activity. As in, are people moving from risk off, meaning stablecoins, to risk on, meaning Bitcoin or altcoins, or are they moving in the opposite direction? Now we can see how much of the entire cryptocurrency market cap is currently in stablecoins, or how much is the market currently risk off. If the market is very much risk off, everybody just owns stablecoins, we might want to buy. If all the stablecoins are deployed already and there isn't much dry powder on the side to push the prices higher, that's when we want to sell. And so this is, over the long term, starting in 2020, the stablecoin dominance. How much of all of crypto is currently in stablecoins? It peaked at 19%, then went down again. Now it's in a sideways trading range for the last 1.5 years, between 5% and 9%. And then as a comparison at the bottom, we've got the Bitcoin price. Now, isn't that fascinating? When the Bitcoin price bottomed, that's when the stablecoin dominance was very high. When then the stablecoins got deployed towards risk on, and the stablecoin dominance went down, that's when the price of Bitcoin went up. Again, when stablecoin dominance was low, the price of Bitcoin was high. When then stablecoins became more popular again, prices retraced. And if we just believe in this sideways trading range, then there is still a lot of dry powder on the side. Right? We could still see quite a bit of a rally. Very similar to what we have seen in November of last year. And so if we take that price action, right, and we look at the Bitcoin price development during the time, then we're just overlaying the same period. We are getting to a price target of around 140K, maybe in the top 150. But 130 to 140 seems to be a realistic medium-term, short-term target. So we would break this line here, but we are still far away from all of those other models. What needs to happen for Bitcoin's price to go even beyond 140 or 150K is new money flowing into the system, as in people from the fiat world depositing money on centralized exchanges or moving money to the ETF. That's what would cause the Bitcoin price go higher. And yes, we do have the tendency of more money flowing into the system. So over the long term, over the years, we can definitely go above 140, 150K. I'm just talking now about the next months or so. Because so far, from the beginning of this year to today, we have seen the stablecoin market cap go up by 16%. So if we annualize this roughly, we are looking at growth of around 30%. So at the same kind of stablecoin dominance, Bitcoin's price is expected to grow by 30% roughly. Maybe a bit more because of the leverage effect, because not all of the Bitcoin is liquid. The long term is definitely bullish, but models like this are overestimating the potential, in my opinion. Bitcoin is still a good long-term investment. Don't understand me wrong. I still think it's better long-term than just buying the S&P 500. But I also think that in the medium term, there is some kind of a ceiling at around 140, 150K. It's important to stay realistic because most people, once we are in a bull run, they think we will go even higher. The momentum will never stop. And then selling never happens. And then the next bear market comes with 60, 70% drawdowns and no profit had been taken. That's, I believe, a mistake. I don't think it makes sense to just always hodl all the way. We've got all of that nice data. We should use it. There is a way to at least partially escape those massive crashes. Again, because we can see when the market tends to be somewhat heated. For example, it tends to be heated when the long-term holders are selling or when the value days destroyed multiple is going up. Now, what's value days destroyed? This indicator looks at all of Bitcoin, and it looks at for how long has the Bitcoin been dormant for. So if there are 100 Bitcoin that haven't moved for 10 years, and then after 10 years they suddenly do move, then we are destroying 1000 value years. If we've got only 2 Bitcoin and we moved it half a year ago and then we move it again, then we are only destroying 1 value year. And this is now value days, value years, same thing. It's a metric showing what happens with the Bitcoin whales, the diamond hands. When the diamond hands turn into paper hands and they think the price is high enough to move the Bitcoin to sell again, that's also when we might want to take some profit. Now, it's not a perfect indicator, as in it flashed red when Bitcoin was at around 40K, and then it still moved up to 60K. Over here, when we were at 70K, and then we had a little bit of a retracement, we still went to 100K. But in general, I like to take some profit when this indicator turns red. I also like to take profit when the net unrealized profit is very, very high. So when we are in the red zone. And the reason is there is no real fair value of Bitcoin, right? We can't value Bitcoin based on future cash flows as we can do with stocks or property. The way we can value Bitcoin is to look at what's the average cost basis of the market. Is the market currently in a lot of net unrealized profit or net unrealized losses? If you bought, for example, for 10% of your entire net worth Bitcoin, and then Bitcoin goes 3, 4, 5x, and suddenly you've got 40% of your net worth in Bitcoin, you might consider realizing some of that profit, right? And reevaluate, rebalance the portfolio, maybe restore this back to 10%, and then use the other 30% to maybe just consume it or to put this in other asset classes. But when you start out with a risk tolerance of 10%, when Bitcoin is already low and then it goes up that quickly, then you might want to reevaluate. So that's what's happening with net unrealized profit. When that's very high, a lot of market participants consider taking profit, and that's when we want to sell as well. And we can only get this kind of data with on-chain analytics. And that's why I like crypto that much. We can get a real market edge. We can get data that's not available for any other asset classes. And that data helps a lot. Now, the same is true for the net unrealized loss. So when the market in aggregate is in losses, or we are in this green area, that means people tend to sell Bitcoin much less. They might even buy more Bitcoin, because then you're moving from 10% portfolio allocation maybe to only 5%, and then you can buy more, of course, if you believe in Bitcoin long term. Most people just wait it out. So if you bought Bitcoin for more than its current price, you're just waiting for the price to go back up again, because Bitcoin is less inflationary than fiat currency. So over time, of course, it should appreciate, as do stocks, as does gold, as does pretty much any asset class, property, etc. The reasons why all assets go up over time is because money is devalued over time, right? The monetary base expands by roughly 6.8% per annum, by the way. It also makes sense to sell when the market is in lot of gains relative to the average cost basis. So the average cost basis is here in blue. That's the realized price. And the market value to realized value Z-score looks at the current gain relative to the realized price and compares it to the volatility. So if the volatility is very high, when the price is going up and down massively, we can justify more gains relative to the cost basis. When the volatility is rather low, we should already sell when the gains aren't that high. So that's what the market value to realized value Z-score is measuring. It puts the current gains relative to the volatility. Or here's the realized hodl ratio. It also might make sense to sell whenever that is high. So that's now how much short-term speculation is in the market relative to long-term holding. And again, the market tends to heat up over time. There's more and more short-term speculation happening as the price is going up. And then when the price is going down, all those tourists get burned, they exit the market, and it's the long-term holders that buy into the crash. So Bitcoin, statistically, if we just look at the data, is a transfer mechanism from the impatient people to the long-term holders. The longer we hold Bitcoin, the more likely we are on the winning side. And so I've already talked now about the potential upside, right? 140K in the short term, And even though it's hard to pinpoint where long-term the next cycle top will be, we do have useful indicators that will then likely flash red when we should sell more. And of course, I will publish videos on those indicators whenever they flash red. I'm not just a moon boy. I'm not just always talking about prices going up. I am sometimes bearish as well. It's all based on market conditions. I try to be as objective as possible here. So again, we don't know where the price is going, but we can look at what is a potential floor. Let's say things turn out badly. Let's say the current momentum turns around, we are going back down again. How low could we potentially go? There is again the average cost basis of the market. And when the price is currently below that average cost basis, selling pressure tends to slow down. And it might make sense to buy very heavily in. It was a good strategy in 2018. It was a good strategy during the COVID crash. It was a great strategy after the FTX collapse. Currently, the realized price is at 44,600. There's an even more pessimistic way to look at this. This is the long-term holder realized price. And again, during the same periods, we tended to go below or at least very close to that long-term holder realized price. And unfortunately, that price is currently only at 29K. But there is a change, right? This is now starting to go up. Why is this going up again? The reason is the long-term holders become a bit more active. It's important to try to figure out what kind of numbers actually matter, because there are so many news around crypto. There are governments buying and selling crypto. There is the Bitcoin ETF. There are the long-term holders. How do those things actually relate to one another? Because the Bitcoin ETF flows were positive recently. So traditional finance bought Bitcoin in the last few days. And we can see how more and more Bitcoin is now held by long-term holders. This is going up. The long-term holders are buying back in again. And we want to buy with the long-term holders, right? The long-term holders sell when we're very high in the price. The long-term holders buy when we go down in the price. And now, even though the price is recovering somewhat, the long-term holders are getting in. And here's the thing, the ETF flows don't really matter that much compared to what the long-term holders are doing. Just compare this. The long-term holders are in blue, the ETF flows are in green, and the long-term holders tend to do something right. They sold over here at 70K, they bought back in at around 50K, they sold again at around 100K, and now they are buying back in again. Interestingly enough, I also made very similar trades at those points in time. Again, feel free to check out prior videos on this channel. There is a case to be made to just buy and hold Bitcoin and forget about it. And I do believe this will outperform the stock market. This will outperform gold. It will outperform pretty much any asset class. But if we put some effort into analyzing the data, we can outperform the market. It's not just about buying a random stock or buying a random property. If we learn enough about the property market, we can find the cheaper house, right? We can find the fixer upper and then sell it for more expensive later on. I believe a similar thing can happen for Bitcoin investing as well. We just have to be better and learn more about the market than the average market participant. We should not be the tourist that gets excited about Bitcoin when it hits new all-time highs. We should be buying when it crashes down, and only the long-term holders buy. And as said, long-term holders are currently accumulating. So I am personally rather bullish. I'm currently risk on. If you got some value out of this video, feel free to give this a like. It helps the channel grow. Feel free to also subscribe. I publish videos regularly. See you next time on YouTube, or potentially see you also in premium. There's the premium membership down below where I share my own trades. There should also be a link somewhere around this video, probably around here. Feel free to just click on that and check out the video. That's it for me for this video. See you next time. Cheers.